see you guys here. I mean, I know how many of you are here. I just can't see you, but you can see me. So welcome. For those of you who have done these webinars before, just bear with me as we get through some housekeeping things, but enjoy the slide. So on your screen, if you've never done one of these before, the bulk of your screen should be the PowerPoint presentation, and you should see this adorable fluffy bear sitting there. At the right-hand bottom corner is the speaker, which is me. Hello. On the left side, you should see several icons, and one of those is a little chat bubble. So that's the icon you will click on if you have questions during the presentation. Keep in mind, I'm going to save all questions for the very end, but just type them in as you have them, and then that way, hopefully I can get through all of them. I can get through all of them at the end. CMCA credits, for those of you who need them, they will be automatically generated and they will be emailed to you probably within the next 24 hours. If you don't see anything in your email box, within the next day, please email us so that we can make sure and get those over to you. Just a couple of quick things. This presentation is being recorded. It is going to go on the ACE YouTube channel. For those of you who don't know, we do have a YouTube channel, and we've got all our, webinars posted there. I shouldn't say all. For the last year or so, all. We just started recording them last year. So if you missed anything or you love the presentation so much you have to, watch it again, there you go. You can get it. Just go to our website, click on education, on classes, and when you get to that on the right-hand side, you're actually going to see something called videos. You can click on that and it'll get you to the YouTube channel. In the meantime, if you're having any technical issues or problems as we're going through the presentation, please don't type anything in your chat icon because I cannot help you. I know nothing about IT and I'm teaching. So even if I did know anything about IT, I still couldn't help you. If you need support, please either email education@altitude.law or call Sean Sanders, who is our amazing education coordinator. You can call him directly at 303-991-2076, and he can help you out, hopefully. All right. I think we are ready then to start. I typically like to start the webinars with some general and basic discussion, because before we can really get to the nitty-gritty of everything, I think it's important to understand the large-scale concepts and then narrow them down. And so anytime I do any presentation that has to do with insurance, whether it's deductibles or claim submission or just insurance in general, I do start off with this slide. Usually they have different memes on there, but this slide as far as what is insurance, because I think we need to understand what generally insurance is. And I don't know that everyone realizes, but your insurance policy is a contract. It's a contract between the association and their insuring company, okay? And what that insurance company does is it says, we will take on your risk of things going wrong, of damages, either to property or to people or whatever. And we are going to step into your shoes and we're going to take care of those damages as long as they occur because of a specified event or peril. In other words, it has to be something that's not excluded from coverage. And, we've had whole classes before, like a 2-hour class on just insurance exclusions, and there was enough to talk about for 2 hours. So obviously, this topic goes very deep and there's so many nuances, but in general, it's just important to understand that insurance, like other things, is really a contract that the association enters into. And therefore, you're bound by the terms of that document. Most associations do not read their insurance policies, and really who wants to, because there's usually a couple hundred pages of them. But do understand that the terms in there do bind the association as far as as far as that goes. Now, types of insurance. Again, this isn't really pertinent to today's discussion, but it will be a little bit, and you'll see in the next slide. But again, just to be clear, there's a lot of different kind of insurance. I typically put them into three very broad categories, because there's a lot within each category. I put them into property, liability, and fidelity. So property policy is the insurance policy that will kick in when there's property damage in the association, whether it's a fire, whether it's a storm, whether somebody gets drunk and crashes into a building, because that has happened, and I'm sure you guys have seen or heard about these types of things. That would be the property policy. It's going to come in and it's going to pay to bring the property back to its original condition. There's liability, and there's, like I said, a lot of things that go into liability. There's different policies under the liability section. The biggest one, of course, is the CGL, Commercial General Liability, and that is the policy that covers, your slip and falls. It's when someone gets injured or someone's property gets damaged as a result of somebody doing something wrong. So for our purposes, it's usually a homeowner or their guest saying, hey, association, you didn't clean off the ice well enough. I slipped, I fell, I have damages, pay for them. Hey, association, you didn't properly fix the roof, and I had water intrusion into my unit, so fix that, and it's your fault. So some of it is kind of property, but to the extent that the damages there's an accusation of wrongdoing, then our liability policies step into. Directors and officers, D&O, that's nothing more than a liability policy to protect individually named directors. And the umbrella policy, of course, is to safeguard all the liability policies. So if you use up all the funds under the limit of your liability policy, the umbrella then kind of comes in and funds the rest, whether it's damages, or whether it's paying for legal fees or whatever it is. So, and I assume you guys all have these policies for your communities. If you're not sure, definitely check with the insurance representative. If you're a board member, check with your community manager, because these policies are pretty standard. And of course, the last one is a fidelity policy, and that is actually protection from someone stealing money from the association. So whether it's someone forging someone's signature, whether it's embezzlement, whether it's the board president emptying out, the operating account and running off to Mexico, I don't care. This is what the fidelity policy is intended to cover. So those are like the three basic types of coverage that associations should all have. And so, of course, they do all have deductibles, which is why I'm covering this. And let's talk about what deductibles are. I think we all know what they are, right? Because we've all experienced them, but they're basically clauses in your insurance policies that relieve the insurer for some initial specified loss, right? So whatever that initial specified loss is, association pays that first, whether it's $500, $1,000, or $50,000, that gets paid by the insurance holder, and then the rest, then the insurance policy kicks in and it pays for the rest. Another definition is a specific amount that must be spent by a policyholder before the insurance policy pays for claims. And we inherently know what the deductibles are. So then the next question is, and this may be one of those kind of duh, everyone knows this, but why do insurance carriers require deductibles? And of course, I can summarize both of these to say to save money and to make sure that whoever the policyholder is has some investment in helping prevent claims, because they're going to have to put some money in too. They can't just give everything to insurance. And at first when I read this, I thought, well, isn't that what we're paying you for, insurance companies? Aren't we paying you to protect the associations and to bear the risk? And yes, we are, but at the same time, we don't want claims submitted every single day where there's basically no consequences of that to the policyholder, right? They got to pay something out of pocket so that they're not going to submit every little teeny thing. So that's kind of the general background of insurance policies, deductibles, why we have deductibles. Okay, so this is all the background, but now let's let's talk about the actual analysis about who pays. And before I start getting into that, I want to talk about liability claims versus property claims because it's an important thing to distinguish between. So remember, liability claims are those that fall under the liability policies, which means the association or a board member or someone acting in the association's behalf is accused of doing something wrong. And by virtue of doing something wrong, there were damages, whether to property, to person, or whatever. Okay, there's some kind of damage. They could have been financial damages. They could have been like physical damage. It really doesn't matter. But the key about liability claims that everyone should really be aware of is that the claim itself, as far as the insurance companies are concerned, isn't triggered for the most part until there's a lawsuit. So a lot of times associations get threats, whether it's from homeowners or contractors or whoever, basically saying, you know, I'm calling my attorney, I'm going to sue you because I don't agree with whatever. And a lot of times the attorneys will say, well, submit that to insurance, submit that to insurance. And that's absolutely right. But you're submitting it as kind of a warning that we may have a claim coming up. Submitting the threat of litigation is not typically considered a claim, and it's just basically giving the insurance company a heads up that something might be coming down the pike. The actual claim will not be opened for the most part until there is a lawsuit. So once the lawsuit is filed, naming the association or a board member, whoever is a defendant, that lawsuit gets submitted to insurance, and insurance then assigns an attorney to represent the interests of the association in the lawsuit. And so the claim itself, like I said, doesn't actually legally come into existence until that time. And so when it comes to deductibles for liability claims, what we see is, so the initial $1,000 of the legal defense has to be paid by the association as the defendant, right? And then the insurance company pays the rest. So essentially in liability claims, 99.9% of the times, you know, deductibles are not an issue because of the way liability claims are structured. You get sued, you submit it, there's an attorney, you pay the first whatever dollars, and then insurance pays the rest. So we don't run into problems with, is it the association or is it the owner or who is it that has to pay? At the end of the litigation, there certainly could be a situation where an association prevails and says, Judge, please give us an award of all our legal fees, and then maybe it tries to get the deductible amount back. But in and of itself, as far as who pays it initially, it's going to be the association. Property claims, that's where we run into problems, and especially with condominium communities with stacked units. Those are a pain in everyone's rear when it comes to figuring out who has to pay the deductible. And of course it is, because half the time we don't even know who has to maintain what, much less insure what. And so it becomes a real hassle to figure out who has to pay the deductible. And although there is no set step-by-step process, there are things that need to be looked at that I'm going to discuss with you. But ultimately, do know it is a legal analysis most of the time. And so definitely get your attorneys involved if you need to, if there's any question. So let's start with the first, and I kind of think of this as the obvious one, is what does the declaration say? You know, we always go there. Well, who has to maintain this? I don't know. What does the declaration say? Because there isn't anything specific in the law that says, in all cases, no matter what, this is the person or entity who has to pay a deductible. There's, we don't have anything that clear. Although we will talk about some nuances that Kiowa has with respect to deductibles. But you're always going to start with the declaration. That is kind of the end-all be-all as far as I'm concerned when it comes to insurance and deductibles. So sometimes we are lucky enough that a declaration will actually have a provision in it that says, here's how the deductibles are going to be allocated. You don't see it very often, but you do see it sometimes, and I'm starting to see it more in newer documents. I'm starting to see some verbiage that actually talks about how to allocate the deductibles. So sometimes it's in this. So you got to start there, and you got to see what it says. And a lot of times, it's never going to, well, I shouldn't say never. Most of the time, it's not going to be out there in the open saying, here's how deductibles are allocated. Sometimes you'll see a deductibles provision, and it's labeled deductibles and rate. But usually it refers you to other provisions in the document, and so there's still a lot of going back and forth and cross-referencing things. But sometimes the provision about deductibles, the word deductible is never used. And it's cleverly hidden in fine print under, not in your insurance provisions, but under the provisions that talk about condemnation, which again, I don't know why, but you will find a little paragraph. It'll start something along the lines of, if insurance proceeds are insufficient to complete all the necessary repairs, ... And usually there's another paragraph that goes with it that says, if you have too much insurance proceeds and you've got more than enough and you've got stuff left over, right? That never happens. But the provision that talks about if insurance proceeds are insufficient, that's an important provision, because ultimately, whatever the deductible is, we can consider the insurance proceeds insufficient because that's still money that the association has to spend or someone has to spend that isn't covered by the proceeds. So those provisions, they do apply, and a lot of times they get ignored. Well, A, because they don't use the word deductible, B, because they're not in the insurance sections of the declaration, but elsewhere. So do know, and again, this is a legal analysis, but you should be aware that your documents are not always as silent as you might think. Okay, now even if you have this insufficient insurance proceeds language, sometimes it's so convoluted that it really doesn't tell you anything. Like sometimes it'll say if insurance proceeds are insufficient to cover all the repairs, the remaining repairs will be paid for by the association or the owners, right? That doesn't tell me anything. But sometimes it has things that are more specific. Like sometimes it'll say, if insurance proceeds are insufficient, they will be paid by all the owners through a special assessment imposed by the association that does not require homeowner approval. Sometimes it's that specific. So it could be helpful. It could be absolutely not helpful, but we definitely want to look for that provision. We also want to look a lot of times on the repair obligations, because sometimes the deductible goes to the person or to the association, whoever has the repair obligation of the damaged component. So for example, if we have a building that's caught fire somewhere and now the carpeting has been ruined and the association perhaps either doesn't insure the carpeting or perhaps that just the deductible is high enough that there's not going to be enough money in there to pay. Sometimes because the homeowners have the repair obligation, they might be required to pay the deductible. I mean, there's a million different variations of this. So again, it's important to know the repair obligations as well, because those typically will come into play. Now, negligence. Deductible versus claim submission. I'm going to talk about the claim submission aspect later on, but what I want to point out here is Kiowa, for communities created after July 1, 1992, does contain a provision that says that if the damage was caused by the negligence or willful action of an owner, or that owner's renter or whoever else, then that owner is going to be responsible for the deductible. And so that is something that even if you don't have anything else to look at, if you do have negligence, then you can use this provision. And for those communities created before July 1, 1992, most of the declarations have a provision on homeowner negligence. It's not under insurance, it's usually under maintenance, and it says if a homeowner was negligent, that, and caused damages, that the association can basically get those costs back from the homeowner, either, as an individual purpose assessment or some form of assessment authority. The one thing I really, really want to caution you to is I cannot tell you how many times I have had associations try to get a deductible back from a homeowner on the basis of negligence when there wasn't any. Because what tends to happen is if something happened where the damage flows from a unit, someone's pipe exploded, someone's boiler exploded, whatever, their sink was leaking, their toilet was leaking, and it caused damage. A lot of associations just basically say, hey, it came from up there, it's obviously negligence, we're going to charge it back to that owner. Well, in Colorado, we need to show wrongdoing to be able to charge anything back. So we can't just say because it came from upstairs, we can charge it back. We have to be able to show that, for example, the homeowner didn't properly maintain those components. He was supposed to get it checked every year and he didn't. Or he left the sink running and that's why there was flooding. It has to be more than just the fact that it came from the unit. And by the same token, though, it works on the other way too, because how many times have you guys dealt with situations where a homeowner goes after the association saying, you need to repair my unit because there was a leak from the roof. So obviously it's your fault because it came from a common element. And we're always saying, hold off, right? It's not necessarily the association's responsibility. Did we do anything wrong? Just because it came from the roof is not going to be enough to establish that it's the association's fault and that we failed to maintain something. That's not going to be enough. So it protects both sides. And that's just how Colorado law is. Okay, so same thing with the deductibles. Don't just assume the homeowner was negligent if the damage flowed from that unit. Now, claim submissions is a whole different thing. And I'm going to talk about it later in more details. But here's the thing. A lot of associations don't want to submit claims because they feel the homeowner was negligent. Okay, and what I'm going to tell you and kind of repeat later is negligence has nothing to do with claim submissions. Okay, claim submissions means there was an event, a covered peril, and whatever the association insures was damaged, and the total damages are greater than the deductible. You submit a claim, and just because the homeowner was stupid and caused the damages, well, guess what? Insurance is supposed to protect us from our stupidity, and the association's insurance policy is the homeowner's insurance policy, and they share in that risk because they all pay for it. So yes, if I live in a condominium community, I share in the risk with my neighbor or my upstairs neighbor that they're going to be stupid and they might cause damage, and then the insurance policy that I pay for with my assessments is going to be used to make those repairs. Same thing with going the other way. But like I said, I will talk about that in more detail later. All right. Next big discussion. Does the association have a deductible policy? If you're listening to me and you're saying, I don't even know what that is, let me tell you, it is a policy, a resolution that basically says when there is an insurance claim and an insurance payout, here's how we figure out who pays the deductible. Okay. Now, there are two things to be aware of. One is Kiowa. So I'm going to talk about Kiowa insurance provisions. They only apply to post-1992 communities, like I said before. But pre-92 communities, I would listen very carefully, because at some point, legislature is going to make this apply to everyone, I think. But anyway, so for post-Kiowa communities, there's a provision in Kiowa that says associations can adopt reasonable, non-discriminatory policies governing the deductible allocation. So we have this authority to adopt these deductible policies. You have that authority as a pre-Kiowa community as well, because Kiowa also says you can adopt rules and regulations and policies. So you could do that regardless. But Kiowa does have language in it that, although it doesn't like flat out say it, it very much insinuates that if you are a post-Kiowa community and you do not have a deductible policy, that you are responsible for the deductible on any claims submitted to an association-held policy. Okay, that's it. Now, this does not include those claims that were caused by someone's negligence or willful action, so those could always be charged back. But other than that, if you don't have a deductible policy saying something different, Kiowa implies that the association has to cover that deductible. So that's a problem, right? That's a problem for a lot of communities. So if you are managing or you sit on a board of a community created after July 1, 1992, and you do not have a deductible policy, I would highly encourage you to get with the association's attorney and have them tell you whether you need one or if your declaration adequately addresses deductibles, because you may be putting yourself at risk of being stuck paying deductibles moving forward. So for pre-Kiowa communities, you're not subject to this provision of Kiowa, right? So arguably, you know, it doesn't apply to you, but at the same time, if your declaration doesn't speak to who pays the deductible, there is like a 50-50 chance that you can argue, hey, it's whoever has the repair obligation, or hey, it's whoever benefits from the work. But then the homeowner can argue, hey, it should be the association because the association submits the claim. So why even give that opportunity to someone to make that argument? Have a deductible policy in place and specifically state who and what and when deductibles are paid. Again, if you have a declaration with specific language on this, then that's fine. But check with your attorneys to see if you have specific language. Most declarations do not have overly specific language on deductibles. And then, of course, if you do have a policy, well, what does it say? I can tell you most policies are written where they basically say, if you have the repair obligation, you pay the deductible. If you were negligent, you pay the deductible. If it's a common element that the association maintains, association pays deductible unless homeowner was negligent. I think they're pretty straightforward. That's how they're normally written, but they can be written in different ways. I've seen associations write the policy to say whoever benefits from the work, regardless of who was the maintenance obligation. So if it's work inside a unit, even if the association maintains that component, the homeowner would still pay the deductible because it's based on benefit and who's going to be benefited by that work. So different ways of doing it, but the long and short of it is don't risk it. Have a policy. I'm hearing more and more insurance agents in the industry telling associations, have a policy, because now the homeowners insurance companies, they have a bad habit of coming after associations anytime they pay anything out on behalf of a homeowner. They want to come back after the association and say, you need to reimburse us. You need to reimburse us because you have a primary policy and you should have paid for this. And again, if it's under the deductible, we say it's under the deductible, and they say, we don't care because you don't have a deductible policy that says this is the homeowners. So don't risk it. Was that clear enough? Did I make that clear? I don't know. Maybe I was beating around the bush too much. Get a policy. All right. All right, so this we kind of talked about, right? Who has the maintenance obligations for the damaged components? So there's a couple of things here when we're looking at the deductible. So there was already something that was broken maybe that caused the damage. So let's say you had a slow leak in a pipe that's between the walls of a condominium, two condominium units, slow leak, eventually turns into not a slow leak, damages like the units below it, next to it. And so now we have that pipe that needs to get fixed, the one that originally started off as a slow leak. So that needs to get fixed. But then now it has damaged certain components within the units, within those common area spaces. Maybe there's mold, who knows? So now when we submit a claim, or when a claim is submitted, insurance is going to look to see what needs to get repaired, everything, right? So is it the pipes? Is it drywall? Is it carpet? And they are going to look at all of that and basically tell you, here's what's covered and what isn't, and here's the total dollar amount minus your deductible. Boom, here's the end result. So when you are trying to figure out with a deductible, and especially if you have a policy that requires the homeowner to pay, if it's a homeowner maintained component, you better be pretty clear on whose maintenance obligation it is for those various components, because it's not always clear in the declaration. And again, was there negligence? I think we've exhausted this topic. If there was negligence, you can assess that back to the homeowner. And I saw somebody ask the question, which we'll get to at the end, of how do you know if there's negligence and who makes that determination. So I will get to that question, I promise. All right, now I know you're thinking, she's already done. This is almost the last slide. Well, this slide's going to take a little bit of time. There are some things that I definitely want to talk to you about when it comes to deductibles and spend some time on. And those are here. So let's talk about wind hail claims. I'm sure you've all experienced or know someone who's experienced wind hail damage. And the fun they had submitting that to their insurance and going through all the repairs and things like that. So, here in Colorado, we're just blessed with having a lot of wind and hail, and insurance companies have all caught on to that, and they're saying, screw that, we don't want to keep losing money. We're losing so much money on this. So we're going to protect ourselves, even though our job is really to put ourselves out there to protect the associations or whoever, but we're gonna do something different. So when I first started out in the industry, I won't tell you when that was, but I'm sure you can tell. There were no special wind hail deductibles. It was just one deductible for any property claims. It was usually around $10,000, something like that. And that's great. We wish we could have $10,000 claim or deductibles now for wind hail claims, don't we? I sure do. So as time went on and there were more claims submitted, insurance carriers started saying, $10,000 just doesn't seem like a high enough of a deductible for us to protect ourselves. And so then we started seeing deductibles going to a percentage of the worth of either the building or all the buildings in the community. And we started seeing 1% to 2%. That was generally where it started. So my question to you is, you probably have a wind hail deductible that's based on a percentage. Do you know for your associations if that percentage is based on per building or per the value of the entire community? The recommendation, if you can do it, is of course per building, because that's a lot cheaper. So let's say you have 1% of one building, so that's $100,000. Now granted, it's $100,000. I skipped what was going on in my head. I didn't tell you. What I was thinking was the building's worth $1 million. Okay, and 1% of that is actually $10,000. So you have 1% of a building. Now you'd have to pay that 1% for every single building, right? So if there's 10 buildings, you end up at $1 million total. But as we know, a lot of times, not all the buildings have the same level of damage. And some buildings luckily escape without damage. Some buildings need new roofs and other buildings just need a few minor, tweaks. And so if you have a per building percentage deductible, you may not get to that $1 million because you're not going to need to do work on all the buildings. So you'd essentially be paying $10,000 per building. Now, if you have a deductible that's based on the worth of the entire community, so that would be all 10 buildings in the community, your deductible, right, so it'd be 1 million and your deductible would be $100,000. So you're going to be paying $100,000 whether it's one building that needs a roof replacement or 5 buildings that need a roof replacement. So again, to the extent that you can get a policy that's based on a per building calculation, that's great. But at any rate, so we started seeing 1 or 2%. After that, we started seeing kind of go 3 to 5%. At this point, I'm mostly seeing 10%, 15%, and even 20%. If any of you currently have a policy for any of your communities where your deductible is less than 10%, consider yourself very fortunate that you have that and hope it doesn't go up next year, because that's what we're seeing. So as you know, the deductibles are so high that the association is essentially self-insuring for the most part, right? How many of you had a wind hail claim? Maybe the insurance company pays like $100,000 and the roof replacement is $1 billion. And the association's stuck holding the bag saying, well, what do we do now? What do we do now? So wind hail deductibles are typically treated very differently than other types of deductibles because they are typically so high that it's not like the association can just reach into its pocket and pull out $1 million to pay for roof repairs, right? It doesn't work that way. You can't use all your reserves on it. You can't deplete your reserves because now you don't have money for all the things you are planning and having to replace later on that are expected, life value. So you can't just use that. So as a result, one way or another, the homeowners end up paying for it, right? Whether we special assess them, whether there's verbiage in your declaration that says it's an insurance assessment, whatever it's called, usually what ends up happening is the association has to go to the homeowners and say, we need each of you to pay $10,000, $5,000, because we have this humongous wind hail deductible. And homeowners are never happy, and they always accuse the board of, well, how dare you get such a high deductible? Why wouldn't you get something lower? And the answer is we can't. It's just not offered right now. But the end result is the homeowner still gets slapped with this assessment saying you need to pay X number of dollars. So that happens, and that's a real thing. So I want to take a quick minute, even though this isn't exactly deductibles, it kind of is, to talk about loss assessment coverage for homeowners. Because ideally, if a homeowner has appropriate loss assessment coverage, the goal of that type of coverage, it's a coverage through the homeowner's personal HO6 policy, and it's supposed to cover them for any assessments that are imposed by their HOA to pay for a loss in the property. So to pay for repairs resulting from a loss. Now, I would recommend to every association that you have your insurance professional either do some kind of a newsletter to the homeowners talking about it, or have them come to your annual meeting, once a year to talk about it, because homeowners, for the most part, really don't know what it is or that it's even out there. And the ones who do know, they think they have perfect coverage, and a lot of times they just don't. So as a general rule, if you just go and say, I want loss assessment coverage, chances are you already have something like that in your homeowner's policy. As a default, that's typically limited to $1,000. And that is just not going to be enough in this day and age. So, homeowners need to specify the exact dollar amount. So it has to be at least $20,000, at least $15,000 so they can get it. They also need to specify that it has to be I have to be able to use it to pay for an assessment to cover a deductible, because a lot of times you will have insurance companies that say, oh, if the assessment letter has the word deductible in it, sorry, we are not going to cover it. And other insurance companies say, oh, it has to have the word deductible in it, or we will not cover it. So you really can't win. Insurance companies are getting wise to the fact that more and more homeowners are filing these types of claims and they don't like it. And so what we're seeing is a lot of different requirements and prohibitions, and depending on who you go through as your insurance carrier, as a homeowner, you may not have coverage if there's a deductible, or you may only have coverage if there's a deductible. So homeowners really need to be careful. And ideally what we want is for everyone to have coverage so that when we do send that assessment letter out, that the homeowners can turn it over to their personal insurance brokers and get it checked that they then forward to the association. I mean, that's the best of all worlds. Now we don't have anyone late. We don't have to do any collections to try and collect it. No one, is out of $10,000 and broke. But unfortunately, this is what we are facing. So inhaled deductibles are very real. And just remember that they are not typically going to be treated exactly in the same way as other deductibles because they're so much higher. And I can tell you that sometimes when we draft deductible policies, we will put in language in those policies that actually specifically talks about wind hail claim deductibles to make it very clear that this is a different animal, different ball of wax. All right, I'm done with that. Requiring owners to submit to their carriers. This goes hand in hand with the next one, which is failing to submit a claim. Okay, so this really happens, most often I see it happen in two situations. One is the damage is limited to the unit, one unit, and the association says, well, that's your unit, you need to use your insurance for it. However, what they don't realize is that in many cases, the association is responsible for insuring the units or portions of the units. So for example, if you manage or you sit on the board of a condominium community that was created after 1992, so post-Kiowa, you are required, regardless of anything your declaration says, you, the association, are required to insure the actual condominium units. Now, you can take out of that finished surfaces, and you can take out of that homeowner installed improvements. So what does that leave us with? It leaves us with all the drywall, all the subflooring, all original installed cabinetry, all the original installed fixtures, all of that. Okay, so a lot of times associations are actually insuring all of this stuff and they don't know it. And here they are telling the homeowner, you got to go through your policy. So like I said, homeowners insurance policies, the carriers, they're getting more and more wise to this. And so I am seeing now more than ever, more and more letters from homeowners carriers to the association saying, hey, we covered this, you need to pay us back. You owe us this money. You were supposed to insure this. You were supposed to cover this, and you need to pay us back. So before telling a homeowner that they have to submit a claim to their carrier, I highly encourage you to either check with your insurance broker, check with your attorney, and kind of have in the back of your head that just because it's inside their unit, that may not be cause for us to say we're not going to submit a claim. Okay, and you need to submit a claim. The other time I see this happening is what I mentioned before, which is we feel the homeowner has been negligent, and the homeowner left cigarette out, homeowner started fire, and so homeowner needs to pay for all the damages because it's homeowner's fault. Now maybe the homeowner was negligent, maybe they weren't, who knows, but the end result is if we insure the units and we insure all those common elements, we have to submit a claim. Okay, the association's insurance is going to be primary. In other words, our insurance trumps the homeowner's insurance. So if there's double coverage, it's always going to come from the association's insurance first. So we do not get the benefit of saying, oh, well, that's your fault, so you need to submit a claim. No, someone's stupidity, someone's negligence, someone's lack of common sense, right, and awareness of their surroundings is not going to impact the analysis of whether a claim needs to be submitted. It doesn't matter if they were stupid. It doesn't matter, because that's why we have insurance, to protect all the owners from the stupidity of their neighbors. That's just what it is. And so that seems to be the hardest thing for boards to accept a lot of times, is why would we have to submit a claim when they are to blame? And so first of all, they're not always to blame, and you don't know, right? Just because it comes from the unit doesn't mean they were negligent. And B, if we have an insurance obligation for the damaged components and the damages are higher than our deductible amount, we've got to submit. So what if we don't submit a claim? What if we say we're not going to do it? Well, then legally the association is going to be on the hook for paying out of pocket anything that insurance would have covered. So if you've got a $50,000 worth of damages and you have a $5,000 deductible, and you say we're not submitting a claim, and our carrier would have covered all $50,000 minus the deductible, then we would have to issue a check for $45,000 out of our pocket, and possibly the $5,000 deductible, depending on whether or not you have a policy allocating deductibles or what your declaration says. So these things it seems like it's the right thing to do to say, no, we're not submitting a claim because you're an idiot. It really does seem like the right thing to say. At least it seems like the justifiable thing to say, but unfortunately it's not. And we don't get to judge. We can judge them, in our heads, but we don't get to judge them as a basis for whether or not to submit a claim. That has nothing to do with anything. Okay. So, all right. I think I'm off my soapbox, and I know that we actually have a lot of questions, and I think I'm going to let you look at this funny picture, which I also love to do in my insurance presentations. I'm going to start going through the questions because I'm actually done with that part, but I knew there would be a lot of questions, so I wanted to make sure that we had enough time. I'll start at the top. Would a lien notification trigger a liability claim? No, that would not trigger a liability claim. Now, if a contractor puts a mechanic's lien on a property and then starts a foreclosure against the association to foreclose on that lien, that could trigger a property claim, but that's usually going to be excluded from coverage, because contract disputes most of the time are excluded from coverage, so you may not even have any coverage there. I believe any legal activity would be handled by the legal firm of the insurance company and not the HOA attorney. Is that correct? Not necessarily. Is there any way to change that to the G plus HOA's attorney? So most of the time, until there is a claim, the association's legal counsel is handling this, because we don't know if there's going to be a claim, right? I mean, somebody may be threatening to sue you, but they never sue you. And so insurance is not going to assign you an attorney if you're just like angry at each other and you're going back and forth and there's threats of legal action, but there actually isn't a legal action, okay? They're not going to assign you an attorney. That has to be the association's general counsel that's going to do it. Now, after there's a lawsuit and you submit a claim, certainly associations, the board can write a letter or send an email to their broker saying, hey, we really would like it if you assigned our current firm to handle this litigation. It by no means is necessarily going to happen, because insurance carriers have deals with various law firms, because insurance carriers are cheap and they pay a much lower hourly rate than a regular hourly rate. And so they have to have someone who's already partnered with them to accept that lower hourly rate. And so most associations, I mean, most law firms don't want to accept a lower hourly rate, because I can get paid, 3 times as much if I just do regular work. So it's never guaranteed that your attorney can be counsel in an insurance defense case, but sometimes it can happen. We've had it where we got assigned a few times. How are payment of dues being handled relative to insurance claims, given a devastating loss in Superior and Louisville. So there actually is a form of coverage for loss of proceeds. And I hope a lot of associations, especially the ones that were damaged by the fire, had that coverage, because what it does is it basically says if you can't get your income, association, because, you know, whatever, there's catastrophe in the community, whatever it is, homeowners are unable to pay and you're losing income, then this coverage will step in and pay the association for the lost income. Again, you have to have it. I would hope that most associations do have it, because if you have a broker that is familiar and is a pro at HOA insurance, they should be getting that for you. So hopefully, if people are not willing to pay or we can't get them to pay, then you would submit a claim under that policy. Alina, the board is the board tasked with determining negligence in a hearing, right? Not necessarily. Not necessarily. So a lot of times your declaration will say, you know, you can't charge something back to a homeowner unless you have had a hearing and determined that they're negligent. The law does not require it. The law only requires a hearing if you're imposing a fine. This would not be a fine. A deductible is not a fine. A deductible is payment for repairs. So it does not constitute a fine, and it does not require a hearing unless your declaration does. And so typically the board has discretion to make that determination whether someone was negligent. But if you abuse that discretion and you just say everyone's negligent, or you're negligent just because it came from your unit, that is definitely subject to challenge, which is why I typically recommend getting with the association's legal counsel just to be sure. Sometimes negligence is absolutely obvious and sometimes it's not, even though you think it might be. So I would recommend checking with legal counsel before making that determination, and checking your declaration to see if there is a hearing requirement, because most of the time there is not. All right. Can a deductible for liabilities also be assigned to certain party? Example, Unit 101's guest jumps a fence, trespass, and injures himself with the fence, or is the association solely responsible for the deductible? Again, up front, the association is going to have to pay it because you're paying an attorney to defend you. Once all is said and done, if it goes to trial and the association prevails, it may be able to ask the judge to award its legal fees, in which case you would put all the legal fees out there and request for them to be awarded, which includes that deductible amount the association paid. So if you do get it, it would be at the end through an award of legal fees by the judge, but you can't assess it, okay? If you lose, you definitely can't assess it to the homeowner. Thoughts about public adjusters handling repairs under the claim? Oh, you're putting me in a tight spot. Generally, attorneys, well, HOA attorneys do not love public adjusters because they take a big chunk of your recovery and you never see that. However, there are some public adjusters out there that are better than others, that are more ethical than others. And I think if in a situation where an insurance company is truly skimping you and not offering you what, you know, the damages are worth, sometimes it is good to get an adjuster because they will negotiate for you, typically get you a lot more money than what is being offered. But I think you just want to be careful with that and know that if you get an adjuster, that you're giving up a portion of your insurance proceeds, and make sure that contract gets reviewed to make sure the association is protected. Okay. I'm starting to hear about insurance companies not covering wind hail under the HO6 loss assessment. Yep. And again, it's going to depend on the policy the homeowner has, how it's written. It also depends on how the letter that imposes the assessment, what verbiage is used. So you can send the same letter to all your homeowners, and half of them are going to get coverage from their carrier and half of them are not. Unfortunately, it's just not regulated enough that it's consistent across the board. So you're absolutely right. A lot of times you're not going to get coverage. If a condo owner delays reporting a leak and substantial damage occurs to the unit walls, ceilings, which are the HOA's responsibility, can the HOA charge the owner for repairs up to the deductible? Oh yeah, plus mold and asbestos remediation. Oh my. So mold and asbestos remediation typically is not going to be covered by your insurance policy anyway. So again, is it negligence for a homeowner to fail to report a leak? Well, did they know about the leak? Should they have known about the leak? There's a whole analysis that goes into that. If insurance is covering it, and we say you knew about the leak, you failed to report it, especially if you have something in your declaration or in your rules saying you must report leaks to the association, then I think you might be able to say, yeah, you're negligent and you've got to pay the deductible. Oh, and by the way, we're also going to charge you back for the remediation cost of the mold and asbestos. But it's a very fact-specific situation, so please don't take what I'm saying now as legal advice in your situation. You really need to have the attorney look at the specific situation and all the details. Should claim payment to the HOA on an owner's unit be paid to the insurer who paid for the repairs, or the owner, or both? I think it depends. I know you guys hate when I say that, but it does depend. It depends a lot on what that transaction looks like. If the homeowner's insurance company already paid and they want to be reimbursed, a lot of times it goes to that insurance company if they've already paid out on it, because the homeowner, you don't want to have them have like a little winning streak and insurance pays and now we give them money on top of it because we're still going to owe that money to the insurance carrier. In other situations where the homeowner has paid and is seeking reimbursement, that could be a different discussion. So it really is going to depend on what has happened, the specific facts, and what the declaration says, and what is really being requested. We are seeing large premium increases for HOAs. What can HOAs do to protect themselves from too many claims and risk of not getting renewed? That is a very real thing. Insurance is going up. There's no doubt about it. It continues to increase. I'm hearing that from most of the communities. Oh, my insurance doubled this year. My insurance went up by like 30%. Happens, unfortunately. As far as what can you do to protect yourself against claims, one is you can have a claim submission policy in place that you give to your insurance broker that basically talks about, here's the process. If a homeowner wants to submit a claim, here's all the things they have to do first. And no, they don't get to submit a claim. The association will determine whether or not a claim gets submitted. So that's kind of one option, to have a policy. And a lot of times that policy is combined with the deductible policy. So it ends up being one policy with all that information in there. Some associations obviously increase their deductibles so that they are not having to submit claims every time there's like a $2,000, incident. And so they're going up to like $10,000 or $15,000. So that helps as well. However, if you're doing that, just make sure you have a pretty clear policy on who pays the deductibles, okay? So those are a couple of things that you could consider doing, and also check with your association's attorney because they may have other ideas knowing your situation. What culpability do insurance agents have when their advice or claim calculations are either incorrect or incomplete? I mean, they're professionals. They have the same liability exposure as any other professional that gives bad advice. So depending on, yeah, you might have a claim of damages against them. You actually would have to have damages. So you'd have to show what's the dollar amount of damages that you incurred. And sometimes that's very difficult to show. And sometimes there really aren't any. And it's just that you're upset because now your homeowners are mad at you. So, but they would have the same type of liabilities as any expert who does not provide accurate advice. Last question, and you guys are free. If an owner had a pipe break under their sink and it cost $30,000 worth of damage to the unit below, and HOA insurance has $10,000 deductible, does the association send a letter to the unit owner with the leak to send to his insurance company, and then they would just owe for their deductible. No, remember what I just said? Just because it came from the upstairs unit doesn't mean that they were negligent. A pipe break, it does not tell me that they were negligent. So no, I would not assume anything at this point. The association, if the association insures the units or portions of the units, it's going to be submitting a claim to its carrier, and whatever's left over, then the homeowner can submit to their claim. The homeowner will be responsible for the deductible, and the downstairs owner may have a personal claim against the upstairs owner if they were negligent, so that could happen. But that would be between the two owners. All right, 1 o'clock, we are done. Thank you so much for joining me today. I hope you got something out of this presentation, and I will see you all next time. Bye, everyone. Thank you.